Welcome to the alternate AB equals CD pattern lesson. In this lesson, we are going to look at a slight variation of the AB equals CD pattern. We will show you the similarities and differences as well as outline the structure of the PRZ zone. Finally, we will finish up with an example using real market conditions. The alternate ABCD pattern is exactly the same as the regular ABCD pattern in the principles we have discussed. The most noticeable difference between the two is the length of the CD leg. The alternate AB equals CD pattern differentiates other patterns as well. For example, the AB equals CD pattern in a Gartley usually has equivalent legs, while the BAT utilizes an alternate form of the 127 AB equals CD pattern. This alternate form of the AB equals CD allows patterns that do not usually have a traditional AB equals CD to create a strong structure with Fibonacci confluence. In this pattern, we are looking for the same characteristics we would see in the AB equals CD pattern, but we will see a blown out traditional ABCD pattern, which sets up for an alternate ABCD pattern. On the left, you will see the bullish, and on the right, you will see the bearish versions of the alternate ABCD pattern. The pattern starts out with the initial impulse leg. The length of the impulse leg obviously sets up the rest of the pattern. Another thing to look at is the amount of time or the amount of candlesticks it takes to complete each leg. We then get a retracement usually between 618 and 786. However, it can be as little as 382, but we recommend a 618 or a 786 retracement because it sets up for the most harmonic move. Then we are looking for the defining move of the pattern, the CD leg. We're looking for a 127 or 1.618 AB leg. This calculation should converge with a Fibonacci projection, usually a 1.618 or a 2.24 of the BC leg. The difference here between the ABCD and the alternate ABCD is that the ABCD required a 127 or 1.618 BC projection. In this one, we're looking for a 1.618 or 2.24 BC projection and a 127 or a 1.618 AB projection. Now we are ready to look at the PRZ. As we have said before, the PRZ is the most important zone because it tells us whether we will take the trade or not. We first get a rally into the PRZ zone. It is defined by the AB equals CD, the 127 to 1.618 of the AB leg, and the 1.618 to 2.24 BC projection. Typically, the 127 and 1618 and then the 1618 224 of the BC will converge closely and the AB equals CD will be further off. We want to take a trade that has good price action, so we are looking for reversal candles in this. So now that we have found our zone, we are ready to make a trade. So we find our reversal candlestick and we make our trade. Our stop area is just below the 1.618 AB projection. Our targets are the 382 and the 618 of the AD leg. So this is the entire pattern. So we would take a Fibonacci retracement tool and go from the top, the A point, all the way down to the entry point, our D point. Let's move to a real market example. I'm going to give you a few minutes and look for the alternate form here of the ABCD pattern. I usually make these pretty easy to spot, but I'll give you a few seconds to look for it. Okay, if you guessed right about here, and I'll outline it for you. And the reason I usually outline these is because if we can see it, then it makes it a lot easier to trade. And we can just see the harmonic move here. And I think it ends somewhere around there. Okay, so now it's our time to make sure this meets all of our requirements. So the first one is we have an impulse leg, and this impulse leg sets up everything. So let's look for the completion, and let's make sure I get it pretty defined here. Let's look for the completion of this, and we'll put a little bit, let's put a like a ray on it so we can see where the defined. Okay, so that is the low end of it. That's where the AB equals CD comes in at. Now we are going to look for the projection. So what I would do is take my, or actually let's look for the fib retracement and make sure it comes in at what we're looking for. So we are looking for usually a 618 to a 786. This one gives us a 50 level and we can be as low as the 382. So this would be still a pattern we would look to trade. And now we will look for the projections. So the first one here is the B to C projection, and I'll pull it over far enough so we can see it. So that is the B to C, and then let's look for the A to B projection. And this comes in, let's make sure I get it right. Want to be as accurate as we can, because sometimes we're within 1 or 2 pips and we wouldn't take a trade that doesn't hit our level. Even though some people would front run, I'm not a front runner. I would rather get something that is actually the correct ratios. So we're looking anywhere between the 127 to 1.618 of the A to B, which comes in at the 37.23 all the way up to the 42.31, and we're looking for the convergence with that of the 1.618 to the 2.24. So you can see that 1.618 and the 2.24 converge right in the same area, and this is what we're looking for, to tell you the truth. We're looking for 2 of these that come in at the same area. So this is our PRZ area, and I can now take the patterns off, or the projections off, and you could see that we actually went up here and just kissed off this area, and I guess I can put a little bit of a box around it so you can see it a little bit better. So anything in this area we are looking to trade. I'll erase those lines. Okay, so we know up here around 42 we have a convergence of ratios. We can look out left and you can see that we actually have some structure around here, judged by right there. Oh yeah, we've had some good structure here. So you could pick this off as a good area for a retracement. We put in a little bit of a bearish candle. I would probably drop down to a lower time frame and confirm this so I could get in. And then now we are looking for our, I got to go out a little bit more, our targets. So we'd probably get in right about here. And again, I got to put our stops. So our stops just beyond this area. So since we're on the daily, you usually take a little bit wider of a stop. So this is 42.62. I'd probably put it at least 30 to 40 pips beyond 42.62. So let's go 42.93-ish. Okay, and my entry is right here at 42.07. So we're risking somewhere in the area of 80 some pips, and then our first target is down here around 33, and then our second one is around 27. Okay, so that's a pretty rough estimate, but you get the idea. Okay, so let's check our risk reward here. So if I were to get in right here, and then we'll analyze the actual position, you notice we have a pretty tight stop, and that's a good thing to have, is because the tighter the stops we have, the greater the risk reward, which means that we can actually, take more positions and not have it hurt us nearly as much. So let's look right here. Okay, so if it were to go all the way to the 618, we would get a 15, almost 16 to 1 risk reward. You can see that we entered right here and we rallied down pretty good consecutive days. Obviously this would take a little while to set up. We rally back up and we rally down and hit our first target. We would then roll our stops to break even, as we said before, and we'd wait for it. You could follow your stop a little bit if you wanted to do that. I usually don't follow a stop, but I would at least have it to break even. You can see we never reached the 618 retracement, and this can be a little bit frustrating, is because we just came probably within about 130 pips right here, probably about 100 pips, and we let it come out, I guess, of this. One thing you can do is, especially if you're a price action trader as well, and we use a lot of price action with harmonic moves, is you look for a continuation trade. So here we are right here. We have this area of support and resistance, right? And we'll end it at this candlestick right here. You can see that we've consolidated within this area. We're struggling. We get up to this area at the top of it at around 34, and we finally break through. This could be this scenario where I would get out of the trade, because now we're looking at higher highs and higher lows, which means that there's essentially the pattern's been broken. So we could essentially get out of it right here. You would have to be knowledgeable and adept at price action trading, but honestly, price action trading isn't that difficult. So this would be an easy thing for you to do. Just honestly, what you have to do is manage your trades. So I roll it to break even once I hit the 382, just because I want to protect myself. And then you can manage your trade from then on. All right. Now that you've seen how this pattern works in a real live market, it is time to recap our key points. First, the C point comes in at the 618 or the 786 retracement of the AB. The reason the C point is so important is that these two harmonic ratios set up the best projection and make the PRZ more likely to reverse. The second point is the PRZ is defined by the convergence of the 127 and 1.618 of the AB leg and the 1.618 or the 224 of the BC leg. These usually converge in a very tight area, which makes looking for the trade and executing the trade much simpler.